Hi, everyone, and a warm welcome to the final episode of our Refinitiv Perspectives Live 24-hour special. I don't think we could have a more perfect subject matter expert to conclude our 24-hour marathon with, but Barbara and Bernard, CEO of Increst Capital, who will come and chat to me about the investment trends to watch out for 2021. Welcome, Barbara.
Thanks, Trang. It's so lovely to have you, particularly at the end of your marathon.
Thank you, and thanks for joining us, although I know it's a bit late for you in the Bahamas. But when I first saw the title of this episode, Remarkable Growth at a Reasonable Price, obviously that intrigued me immediately. Can you tell us more about what investors should look out for 2021?
Sure. So I think if 2020 taught us anything is that nobody has a crystal ball, right? So in 2021, what we're really grappling with right now is the race between the virus and the vaccine. And if the vaccine wins, the stay-at-home stocks will continue to do well. And if the virus wins, the stay-at-home stocks will continue to do well. And if the vaccine rollout is faster than expected, the return to normality and the opening up trade will do well. Who knows what'll happen, right? So if you're running a portfolio, I think what you should do is build an all-weather fund. So we have stocks that benefit from both. And the commonality between the two is that we think they're undervalued, irrespective of how long the pandemic goes on. So last year was all about macro and momentum. And this year is about micro and math. So last year, when the government just shut down the high street and made everyone shop online, of course tech did well, right? And as an investor, you're taught to value companies in a certain way. And zero sales assumptions aren't really anything capitalism was built on, right? So it was like this roller coaster, and math didn't matter. People weren't talking about PEs and some of the parts and valuation. It was just survival. And so what's different about what that enabled us to do was to really double click on some of these companies, do the homework, and build a portfolio of companies that we think were overlooked for whatever reason. They're extraordinary value. And as the world reverts to a more normal place where the rules of valuing a company begin to apply again, we think these companies are going to do extraordinarily well. Obviously, you have bubbles of speculative companies that did, ridiculously well, and tech did well, but there's a whole nother part of the market that had been a little ignored. So we really think this is a dream scenario for a fundamental stock picker, because you definitely have the tailwinds, right? GDP growth is expected to be positive this year. It should be a good year, but parts of the market are definitely extended.
Thank you. Super insightful. And I guess you touched on the learnings from 2020 already, but are you able to maybe expand on it further for us?
Yeah, when I reflected on 2020, the one word that kept coming back to me was resilience. And what I mean by that is resilient portfolio managers who were able to pivot to the new normal thrived, and resilient companies that were able to adapt digitization and their employees working from home, servicing their customers another way, they also thrived. So people who had pre-existing conditions and companies who had pre-existing conditions had much higher rates of morbidity during COVID, right? If you went in and had an over-levered balance sheet and had not adopted digitization, you really didn't do well last year. And so you can look at an industry, let's just look at the cinema industry, right? One of the worst hit. There are companies that will go under. There are also companies like IMAX China who have no debt, who have come out of this stronger, who are picking up market share, because when people emerge from COVID, guess what they crave? Experiences. And so this is what 2020 really taught me was the importance of resilience and the meaning. And it's not something you can screen for. This is something you need to talk to management about, right? You can't be driving with the rearview mirror. How are we going to navigate this crisis? That's resilience.
Resilience, very, very true. And thanks for sharing that. And you talked about, positive growth outlook for 2021. But are there any hidden gems that investors should look out for?
Oh, yeah. I mean, that's the wonderful thing about investing. There's always something to do, right? So we spoke about the tech stocks having a really good year last year, and they should have, right? They brought forward like 3 years worth of earnings. Their TAM increased. Even my mother was shopping online. But I mean, this year, they're not getting my deceased grandmother online, right? So how much more is there to run? They will probably do well, but they did really well for a really good reason last year. I think if you go to the second or third derivative of some of these and you think about what are the enduring trends from COVID, digitization is a really important one. That you need to be digitizing irrespective of the industry. And so across our portfolio, we've been able to find remarkable growth at a very reasonable price. And when you talk about digitization, what's overlooked, in my opinion, is its impact on things like video games, right? Music. I don't know how old the average viewer is, but when I grew up, we bought a cassette from a cassette store. The digitization of music was disastrous for the industry because people started pirating CDs and cassettes. Today, with the onset of things like Spotify and Apple Music, people prefer to stream than steal their music, right? And every time you click on or stream a song, the owner of that music is getting paid. It's a great business again. So if you look at a company like Vivendi, they're large. They own UMG, which is the largest owner of music titles in the world. There are basically only three main music title owners in the world, by the way. It's Warner, Sony, and UMG, and UMG is the largest by far. So if you look at a business like that, their online streaming business grew 24% year on year last quarter. Music is now a good business, and it's underappreciated. However, a very smart investor absolutely understands the value of it. Tencent recently executed an option to buy another 10% of UMG. They now own 20% of it. They valued UMG at basically the same price as Vivendi, which means you're getting the rest of Vivendi for free. And this is what I mean about doing the math. It's even better. So now you have the strong tailwinds of digitization. You also have a catalyst. UMG is going to go public, right? So this is what I mean about there are wonderful technology plays. There's wonderful growth out there beyond the FANGs where you don't have to pay a ridiculous price. Another one in Europe is Zur Rose. Super interesting company. It's basic healthcare is basically the next frontier of digitization, right? And in Germany, prescriptions are mandatorily going to be online as of 2022. So again, you have a catalyst. And online pharmacy, as you can imagine, is a wonderful thing to go digital, right? It's a small package, it's light, so it's easy to ship, generally high ticket. You typically don't send it back. Really good business model. And I bought that for one-time sales in March of last year. It was up about 100% last year, but it still has 80% upside to my target. So it's just thinking through, what does digitization mean? And where is it underappreciated in some industries? And that's what we call remarkable growth at a reasonable price.
Thank you. Really, really valuable insights around digitization, which came up in a couple of our other episodes, but really talking about those underappreciated stocks and companies. So thanks for sharing that. And I guess on the flip side, any other surprises to kind of look out for or to be aware of for 2021?
I think there are lots, right? When I'm yet to find a strategist who thinks the market's going to be down this year. So that alone has me a little suspect. You always have to be wary of your blind spots. And ESG funds took in a ton of capital last year. And for me, ESG is not a noun, it's a verb. To do ESG properly, you have to really research these companies. And you have to adopt the mindset that you're owning 100% of this company from now until Judgment Day. You need to really understand how is management incentivized, go through that supply chain. I mean, it's not something you can screen for, in my opinion. And yet, there are a lot of these sort of closet bench hugging ESG funds that just went overweight tech and underweight energy. Well, that worked brilliantly in 2020. But was it luck? Is that the future? Is that sustainable? And one, as a value investor, one could make the argument that tech looks kind of pricey here and energy actually looks really cheap. And it would just take a reversion to the mean somewhat in those two sectors for ESG to underperform, which would be a crying shame because ESG is the future. It's absolutely the best way of investing, but I think it's active, not passive. And so that is something that I think is an underappreciated risk in 2021. I think inflation is potentially an underappreciated risk. I also think there's some underappreciated opportunities when it comes to ESG, and a bit like what my talk on digitization. I can't buy Tesla. I'd get a nosebleed. I just can't do it. And I could spend all day trying to figure out which battery company to buy, but I don't know who's going to win. I'm not the car company writing that contract. But what I do know is that the demand for nickel and copper is going to go up 20-fold between now and 2030 because these EV cars use 10 to 15 times that of an internal combustion engine. So what I can do is go buy a royalty company on copper and nickel mines, some of the best in the world, and relax about it, right? Demand is going one way, supply is not going up, and I feel really great about that. So there's this company that we're super excited about in Canada. It's called Nova, and it's the first company to ever do royalties on copper and nickel. Royalty companies are very popular in gold and other precious metals. But I think these are the ways to play, some of these ESG trends without paying the super hefty price, just a safer way to find remarkable growth at a very reasonable price.
Thank you so much, Barbara. And I think you kind of answered the final question I would have had around ESG because, again, it has come up so much, but really understanding what 2021 holds in terms of ESG funds and really the stress test that a lot of these funds need to go under and understanding the potential risk, like you said, around energy and tech. It's really, really insightful. So thank you so much for sharing it. And that's actually bringing me to the end of our episode. Thank you again for being here with us today. And I just want to thank everyone for bearing with us for the last 24 hours, 24 episodes. It's really a record for us. And I think it's probably the first live stream to run really for 24 hours. So we are really excited to see how we performed and would love to get your thoughts and comments. So feel free to, leave them in the chat under the videos. And the event page will actually be available until the end of today. So we encourage you as well to kind of look at the replays, share them with your connections. And I myself for sure will be kind of absorbing all these new learnings and perhaps coming up with a recap. So I hope to see you soon in our next live stream. And until then, please take care.